Hi, I'm Jim Jubak, and welcome to this week's Quick Pick video, ESS Tech. Ticker is GWH. Gigawatt hours. So you might imagine this is a battery company. And yes, indeed it is. It's been around since about 2011, got some funding through a SPAC. So you're talking about a company that is very, very much out on the horizon. So like a lot of very far out companies in this bear market, it's been crushed. The 52-week range on this stock is $21.37 down to $2.60. You can see a fairly large range. We're down near the low end of the range. We're at 370 on, say, the 18th of October. So that's why I like this price. If you look at a chart, you can see there's not much going on here. There's no reason you have to buy it now. But on the other hand, this is a great stock for dollar cost averaging for a long-term investor. Okay, what they do is they are one of the key companies, as in they are focused and they're actually got a technology that they're selling in what is called flow batteries. Now, you know about lithium ion batteries. They're the ones used for in cars and cell phones and all that. They are really good for mobile uses because they have a fairly good energy to weight ratio. They aren't very good for long-term storage, although they are being used for that. The problem is that they are flammable. They have they do have a large but narrow range of operating temperatures, 14 to 140 degrees. So if you get above that and they generate heat, you have to either air condition or heat them. They have a limited cycle life as they recharge, and over time their capacity degrades. Each recharge takes a little bit out of the life. It's one of the things that's going to be interesting to see what happens in the electric car industry, because we really don't have enough time yet to know how long electric car batteries are going to last. Anyway, flow batteries are large. They're basically tanks of electrolyte. This one uses iron instead of lithium. And basically what you do is you put electricity in, it's stored in the iron solution, and then when you need to get it out, you uncharge it from the iron. So it's got a relatively long duration, maybe about 3 times what you get from a lithium. It's got a virtually unlimited life cycle, no capacity degradation over a 25-year lifespan. And that plus the fact that you don't really need to heat it or cool it means that it's got a very low cost of ownership, low cost of operation. So what you're seeing is ESS starting to sell what it calls energy warehouses to utilities. For example, they just sold one to Tampa Electric to support its Big Bend solar project. And they're seeing sales to Australia, seeing sales to Europe. The whole idea is if you've got a solar power plant or a wind power plant, you need some way to store the energy. This is a really, really effective way to do it. We're talking about a very, very early stage company. Revenue in the second quarter was 686,000, not million. They're ramping up a second manufacturing line, so their capacity is going up to 500 megawatts of capacity to manufacture this stuff. So it's an early stage. Certainly dollar cost average in. This is for an investor with a long time span, but flow batteries are definitely going to be a big part of the renewable energy ecosystem. So thanks for watching. If you like this video, please give us a thumbs up. You can subscribe to my videos. That way we're doing about 3 a week. If you subscribe to my YouTube videos, you get a notification when we do the next one. If you want more of my stuff, including energy portfolios and penny portfolios, which are both going to include ESS, you can go to my free site, that's jubakpicks.com, for my paid site, which also has options and ETFs and some puts to deal with this bear market. You can go to my paid site, that's jubakam.com. You'll find stuff to that down below. Thanks very much.